HODL Cryptocurrency. What is HODL Strategy? HODL is a term that's thrown around a lot in the cryptocurrency community. Since it's used so often, it's become the slang term new investors usually learn first. The word HODL originated from a post on the Bitcoin forum, a platform where investors can share their opinions about Bitcoin and the economy. On December 18, 2013, a forum member with the handle GameCube wrote a post with the title, "I am HODLing," as HODLing is a misspelling of holding. The price of Bitcoin in 2013 was volatile, surging to over $1,100 at the beginning of December 2013, up from just over $100 in April of the same year. Reports on December 16, 2013 of a Chinese ban on payment companies working with Bitcoin exchanges may have inspired the original Bitcoin talk post. Now that the deserving error has become something of a trendsetter, it's only fair that we get to know more about how it works. And by the way, why do you think banks vigorously oppose the use of cryptocurrencies? Let us know in the comments section below. At 10:03 a.m. UTC on December 18, 2013, Bitcoin Talk Forum user GameCube posted, "I am HODLing," a drunk, semi-coherent, typo-laden rant about the user's poor trading skills and determination to simply hold his Bitcoin from that point on. "I typed that title twice because I knew it was wrong the first time," GameCube wrote about the now famous misspelling of holding. "Why am I holding? I'll tell you why," he continued. "It's because I'm a bad trader, and I know I'm a bad trader. Yeah, you good traders can spot the highs and the lows, pit-pat, piffy, wing-wong-wang just like that and make $1 million bucks. Sure, no problem, bro." GameCube concluded that the best course was to hold since you only sell in a bear market if you're a good day trader or an illusion noob. The people in between hold. In a zero-sum game such as this, traders can only take your money if you sell. He then confessed he'd had some whiskey and briefly mused about the spelling of whiskey. Within an hour, HODL had become a meme. Initially, the memes referenced the movie 300 and Braveheart, but now there are countless HODL memes floating around the internet. Many HODL memes now reference Game of Thrones Hodor. Cryptocurrencies continue to gain more attention as an investment opportunity due to the remarkable breakouts in 2017 and 2020. The trend of financial decentralization and currency digitalization provides room for growth to cryptocurrencies. Under the post-COVID low-interest context with inflation expectation, investors also hold cryptocurrencies for value reserve. HODLing refers to the buy and hold strategy. Buy and hold investors tend to hold their assets for an extended period of time to profit from the long-term value appreciation. In contrast, there are traders who are much more active in transactions and seek returns by buying at low prices and selling at high prices. Due to their highly volatile nature, cryptocurrencies provide great opportunities for traders to build up long and short positions frequently. However, HODLing can provide more safety to investors as they're not exposed to short-term volatility and can avoid the risk of buying high but selling low. In this day and age of Bitcoin, there are several trading strategies people can use. HODLing doesn't entail full-time commitment like day trading and may be the perfect entry strategy for beginners. Instead of buying and selling based on the short-term price moves, a user who HODLs simply buys Bitcoin and then holds on in the hopes of its price rising in the future. Despite there being mostly only 2 steps to HODLing, this trading strategy requires a great deal of emotional strength. Just from 2011 to 2013, Bitcoin's price saw an increase of 52,000%, and in the following year, it dropped 80%. This volatility in price is why HODLers experience a great deal of emotional stress. In most cases, there are 2 antagonists to the HODL strategy: FOMO, fear of missing out, and FUD, fear, uncertainty, and doubt. These 2 demons can often lead to investors selling at low prices, ultimately making less profit than initially intended. For hardcore Bitcoin believers, also known as Bitcoin maximalists, HODLing means more to them than just battling the profit-eroding inner demons. The Bitcoin maximalists believe that ultimately, cryptocurrencies will replace fiat currencies, therefore nullifying the relevance of the fiat exchange rate. As mentioned, HODL can mean one of 2 things when discussing cryptocurrencies. Investors may be talking about a specific HODL strategy they're using to gauge when to buy and sell crypto, or they may be referring to the HODL token itself. At the core of the HODL approach is the idea that crypto investors shouldn't be trading based solely on short-term pricing moves. Instead, cryptocurrency investors should hold on to their coins or tokens, riding out periods of volatility as they come and go. Even though cryptocurrencies may dip, pricing still has the potential to rebound, making up for losses over time. This is what happened with the June 2021 crypto market crash. Many Bitcoin investors saw all of their 2021 gains wiped out after the cryptocurrency's price dropped dramatically. Other cryptocurrencies, including Ethereum and Dogecoin, also charted sizable losses. But the down market proved to be temporary, as many crypto prices have inched back towards their pre-crash levels. Crypto investors who cashed out amid the crash may have netted substantial losses, but those who chose to HODL instead may eventually be rewarded with much higher pricing moves as the cryptocurrency market rebounds. The strategy of HODLing is more extreme than simply holding, hence the acronym Hold On for Dear Life. That means you should HODL crypto or HODL stock even through extremely volatile times. This strategy can be a smart way for investors who might otherwise try to time the market. HODL can be used, especially when the market is going down, to help investors resist the urge to panic sell. This is especially smart for amateur investors who are more prone to emotional or impulsive reactions. Investors who don't use the HODL strategy may be similar to day traders or forex traders who seek to profit from volatility in the market. These investors attempt to buy low, sell high, or short sell, profiting from smaller market movements rather than looking at the long term. Although anything is possible, it's unlikely that a downturn in the markets overall will result in a crash of the total crypto market, which is why a HODL strategy could make sense. It's important to remember that even in the direct downturns, like the market crash that precipitated the Great Recession, there was a noteworthy recovery. Deciding when to hold or sell cryptocurrencies is a personal choice, and investors should do the research and due diligence before making those decisions. Some investors choose to adopt a HODL strategy across the board, meaning they buy cryptocurrencies to add to their portfolio and don't plan to sell them for many months or years. While this is a good move for people who believe in the long-term value of cryptocurrencies, it's unclear what the outcome might be. The future of the industry is yet to be seen. Hacks, bad news, and other world events can affect crypto prices, as they can in any market sector. Some choose to HODL certain coins, but actively trade other coins they don't believe have as much potential for growth. Some HODL coins tend to be more established and stable, although HODLing a coin with a lower market cap could result in higher profits if it grows significantly over time. The HODL strategy may be a good choice for investors who don't want to spend a lot of time in their cryptocurrency portfolio or are new to the technical analysis of crypto investing. No matter what sector you're investing in, it's always smart to build a diversified portfolio so that if one market segment drops, others might be doing well and help to mitigate losses elsewhere. There are thousands of different cryptocurrencies available to invest in to build a diversified portfolio. That said, the cryptocurrency market is still very volatile. As with any investment, it's important to do research, pay attention to the market, and know that anything can happen, even the loss of an entire portfolio. If an investor is planning on holding on to a cryptocurrency for a long period of time, they'll want to make sure their holdings are as secure as possible. Using a crypto wallet is the way to go. Crypto wallets are digital ways to store the passwords or private keys that give you access to your coins on the blockchain. Crypto wallets keep your coins safe from hackers but accessible to you, so you can send and receive different types of cryptocurrencies. And what is a crypto wallet exactly? They come in different forms, including hardware wallets that look like a USB stick to mobile apps that even allow you to shop using crypto, the same way you would with any mobile wallet. For HODLers, as with all investors, building and maintaining a diversified portfolio is key. This may mean the investors need to add more money to their portfolio over time, or that they need to sell one cryptocurrency for another. For example, in previous years, the price of certain coins has increased significantly, while other coins haven't grown as much. If you invest in a coin that dramatically increases in value, your portfolio could end up imbalanced with a large percentage of your holdings in that coin, which leaves you more vulnerable to losses if that coin fluctuates. In that scenario, you may want to rebalance your portfolio to maintain your original allocation and proper diversification. While HODLing may be a good strategy, it's not completely passive and involves paying attention to your portfolio and rebalancing over time. Besides day trading and HODLing, others choose to SPEDN and BUIDL using their cryptocurrencies. These terms are twists on spend and build inspired by the creative misspelling of HODL, but these are different from holding on for dear life, as they're strategies to help the industry grow with the hope of making cryptocurrencies more valuable. The philosophy behind spending is that by using cryptocurrencies to buy goods and services, it encourages the adoption of crypto use in the real world. These days, with a growing number of outlets accepting crypto as a form of payment, and now some governments recognizing crypto as legitimate forms of currency, the SPEDN strategy could become an effective way to put more crypto in circulation. Also, the cryptocurrency industry is young and needs a lot of development and work. This is why some choose to build companies, platforms, apps, and tools to use with cryptocurrencies. In fact, BUIDLs cast themselves somewhat in opposition of HODLers, making it their mission to encourage more people to build and contribute to the blockchain. HODL has earned its fair share of attention in the media. Publications such as the Washington Post and CNBC have written articles explaining the HODL meaning for new investors to cryptocurrency trading. There's even a site called the Daily HODL that publishes regular cryptocurrency news and updates. Social media influencers and tech innovators have also embraced HODL as part of the modern vernacular. Although HODL seems like a hip new crypto term for holding on for dear life in the face of volatility, HODL can also trace its origins back to the time-honored investment strategy of buy and hold. In this new iteration, though, there's a stronger mandate to hold on to your crypto and not panic sell. As with any investment, selling during a downturn can lock in losses, whereas sometimes, if you hold steady, you may see a recovery, hence the wisdom of HODLing. Now that you've heard it in detail, do you think HODL is a great strategy for crypto traders? Let us know in the comments section below.